On this month's edition of What's Up or Down with the Market, we're going to talk about market values, inventory, and what to do with these blue tax letters. Let's get into it. Hey, I'm Dennis with the Dennis Tuttle Real Estate Team, and lots of interesting things to talk about today. So first of all, let's talk about what's happening with the market. The last couple of years has been the most unpredictable real estate market that we've ever seen. You know, when COVID hit, nobody had a clue that the market was going to just explode the way that it did. But interest rates dropped down into the threes, and people quit listing their homes. So we had this massive supply and demand crisis almost. People couldn't find homes, so that naturally economics kicked in and prices skyrocketed. We were seeing over 20% appreciation in a single year, when normally we would see 4 to 5% max in Texas. So this was definitely not the norm for us. But it happened for so long, 2 years of these low interest rates, everybody started to think that it was normal. So now the big question has been, is the market crashing? And nobody's able to predict or tell the future, but we can tell you that the market ingredients for a real estate crash currently are not there. There's other economic things that could happen that could influence that, obviously, but we're just not seeing it. The same ingredients that led to the crash of 2007, 8, 9 is not the same ingredients today. However, there are a lot of things happening in the economy that we're paying attention to. But looking at the numbers, the market values right now, the median home price is up, not a lot, but it's up 0.6% year over year, meaning we're 0.6% higher than we were in March of 2022. And that's pretty fascinating considering in March of 2022, we still had really low inventory. In fact, it was record low inventory. I think we had less than a month of supply of homes, and interest rates were still, you could get interest rates still in the threes and low fours, depending on your credit score. And so we're beating the prices today from what we were doing back then. So that's absolutely fascinating. And in a couple of weeks, we're gonna have data as we finish out April. We'll have data to see, did we hold the line? But I'll tell you this, the gap has been shrinking. So I think this is the month we're gonna see, are we gonna continue to increase the trends that we had last year, or are we going to see a decline in prices year over year? But the good news is we haven't seen, 10 or 5% or 20% declines in prices. We have seen prices come down from the peak of June and July, but that happens every year, so it's not really a concern for us. So the other thing that's interesting is inventory is down to 2.4 months supply, which is a seller's market. Anything under 5 months is considered a seller's market. We peaked out a couple months ago at 3 months, and now that's come down to 2.4. And if we could separate new construction from resale inventory, so an existing home is actually at 2 months supply, and new construction is at 4.6 months supply, and they've gotten that down from over 6. There was a time in like November, December that we had over 6 months supply of homes for new builds and new construction, and that was technically a buyer's market. And so on the other side of things, though, resale is at 2 months, and we're seeing any homes that are coming on the market that are under 400,000 right now. People are back in multiple offers again. We're seeing some properties selling for higher than list price, and that is strictly a supply and demand issue, and also the fact that people are getting used to these interest rates and whatnot being in the 6% range. So anyway, so it's very interesting, but the market has still held stable. Now, let's take that to these letters that you may be getting right here. Now, if you're in Tarrant County, for example, the protest deadline is May 15th. That's going to be on whatever county you're in. It's going to tell you what the protest deadline is. And then there's two numbers that you need to look at. One is market value. The second one is the appraised value. The market value is what they think your house is worth. And the appraised value, or it may say assessed value, that's the number that they're going to tax you on. They're going to base your taxes on, which the appraised value may be lower than market value. If you have a homestead exemption, they can only increase that a certain percentage. The cap is about 10% a year. The challenge is, though, if you have a market value that's 100,000 higher, that tells you the target that they're shooting for. So every year it's going to continue to go up, continue to go up. There are companies that can help you protest taxes. We're happy to give you data. We're happy to give you comps. In the last couple of years, there have not been any comps that would help us to lower tax values, because everything, even the ugliest of houses, we're selling for a ridiculous amount of money. So we just didn't have the data to support that. But today, I think we do have a little bit better data. We may have some lower comps because there are some one-off sales and things that might help us to show tax values or market values being lower. However, the overall market data I just shared with you at the beginning of this update, I think is going to help us, because a lot of these, like this one I'm looking at here, the market value didn't go up that much, but a client sent me one of theirs and the market value was up like 20% last year, from 2022 to now the 2023 values. But if we look at the overall market's only up 0.6%. And so I heard from a lender that was talking to one of these tax protest companies, and there are companies out there that will protest your taxes for you, and we're working on getting you a couple recommendations for that. But they said that they're going to lean heavier into the market data overall to show that the market values are only up 0.6% as a whole, and yet the assessed value you just raised is 20%, and that's not lining up. And so we'll make some of those graphs available and some of that data available as well. So if you choose to go protest your taxes personally, you may be able to use that as well. Now, I think they are catching up, probably for maybe some lost opportunities they could have had the last couple of years to raise those values. But they went up just as much this year as they did the year before, yet the market's not up as much. So it'll be really interesting, but I think if you have the opportunity to protest your market value with the county, I think that you should do it. And a lot of times they will try to settle or negotiate something before you get all the way to an actual in-person or online protest. So it's definitely worth a try. We're happy to provide the data that you may need. I would highly encourage you, though, to hire a company that does tax protesting. They will literally handle the whole thing for you. They'll file the protest, they'll do the protest, and they usually charge a percentage of how much they saved you. So it's still a better savings than having to go pay all that in the taxes. So anyway, I know this is a longer update than normal, lots of information. Please reach out to me or anybody on the team if we can help you. And hope this data and this market update was valuable to you. And we'll see you next time. Have a great day. Bye.